Brexit is not all that's going on in the market. There are longer-term trends that we need to bear in mind. There's a longer-term story here that this sort of little blip in the market is playing a part of. What we've got here is 10-year growth in house prices across the country by district. And you see a very clear trend across the country here of very strong price growth in inner London. Prices grew by about 100% over the last 10 years. And similarly, very strong growth in outer London. The prices growing by 76% over the last 10 years. Looking more recently, that story has changed somewhat. Inner London has not been performing so well, and that's down to a range of factors. We've seen a lot stronger growth in places around South Cambridgeshire, around Oxfordshire. Owner occupation is a relatively recent trend. I mean, the move to owner occupation is really something we've only seen grow to such a high proportion of the population over the last sort of 20 or 30 years. We expect that trend to continue. And so despite sort of government efforts to sort of increase home ownership, we're expecting more and more people to be living in private rented accommodation. On the other hand, there's a problem in that buy-to-let is no longer as attractive a choice as it once was. So you've got this huge demand from people to live in rented accommodation, but it's becoming more hard for a buy-to-let investor to acquire buy-to-let properties. A massive peak in buy-to-let transactions in Q1 of 2016, and then since then transactions really have been quite weak. We're expecting transaction levels for buy-to-let to fall over the next few years. We see a real opportunity for professional investors, and that may be institutions, it may be professional landlords, it may be agglomerations of family offices. All we can say really is that there is an opportunity for larger scale investors to move into this market. It's still a relatively immature market, so the size of the market is very large. Also there's opportunities in development, and we've seen more and more build-to-rent developments coming forward. We've heard a lot about it in London already, we're seeing more and more of it in Manchester, but there's also opportunities and schemes coming forward in places like Liverpool, Birmingham, Bristol, even Leeds, believe it or not. We've seen a trend towards decreasing yields, particularly since the global financial crisis. So what does that mean for house prices across the UK? The thing really to sort of pay most attention to is that 2017 figure where we've got 0% growth forecast over the next year. Now that's not predicting that price growth is going to be zero everywhere. There will be outperformers, there will be outliers, but across the UK as an average and across London similarly we expect price growth to be very slim if any at all. Price growth is pretty weak. I mean, long-term price growth has typically been a lot higher than this. Rents are looking very strong. So we forecast much stronger growth in rental growth for the UK, so the 19% over the next 5 years versus 13% for house prices. London, similarly, 25% growth over the next 5 years versus just 11% for house price growth. And that means we're expecting yields to increase in both of these markets, and we think that there's an opportunity here. What we see here is a real variation across the UK. In terms of expected rental value growth. You get places like London with sort of 24.5% growth over the next 5 years. Bristol performing very strongly there, mainly because we've seen a huge increase in demand from employers requiring highly skilled workers moving out there, but we've not seen an increase in development, an increase in housing supply to match that, so house prices and rents have been especially strongly growing there. Relatively strong growth in places like Birmingham and Manchester, those sort of traditional second cities, the next place people look after London, generally speaking, and somewhat slower growth in those sort of edge of secondary, possibly tertiary cities like Liverpool and Sheffield. Generally across London, there is still room for growth in places like Hillingdon, in places like Barking and Dagenham, in places like Newham. And that's really driving this high overall average growth.